Hello everybody. So this video is entitled Mad Max Green. What a week. And I am of course talking about the 5-day heat map, the super green heat map of the stocks and the sectors that I cover on the channel, i.e. technology, hypergrowth, growth. It's all so green. The market makes absolutely no sense. What made the market believe that Microsoft was somehow 14% cheaper 5 days ago than it is today? It adds trillions and it removes trillions based on macro vibes, macro flows. To me, these wild swings in just a 5-day period is just a proof that, well, there's no such thing as proof anywhere, but it's an indication that it's all about the denominator. It's all about the money flows. It's not the fundamentals who are moving these companies right now. For the past 6 months, these companies have not moved on specific information related to them. They have moved on the crazy flows within the denominator, people selling risk on. You sell risk on, you buy risk off, and you do the same thing for risk off and risk on, and you do that with the time horizon of a fruit fly. So oil is nearly back to the levels of the just beginning of the conflict. I mean, give me another few days like that, and oil will fall back to $2 a gallon at the pump. Like this is ridiculous. Like, they've traded oil up, and now it's coming down. And then Bitcoin, of course, Bitcoin is also bouncing really, really well. So of course, why is this happening? Of course, it's because Iran said they would reopen the Strait of Hormuz canal, the Strait of Hormuz. They said they would reopen it. But anyways, the point I'm trying to make here is that the financialization of the markets, Wall Street gone mad, is the reason why we have such wild swings. And I do maintain on this channel that the swings that we see, these huge swings we see about twice a year, maybe more depending on which stock you own, these swings we see, they're bigger, they're stronger than ever. And in the 2020s, it's been very tough to invest because of that, because of those giant swings. And we've had very little periods where the market is just stable and starts trading on fundamental. During these periods, like we've had since 1010, in my view, the market has been much closer to a casino where it's all about where the denominator flows to, or where the denominator is removed, where the liquidity flows to, and where the liquidity is drained, injected back in the system, all based on macro, but not even on objective macro analysis, more based on tweets and sound bites. A soundbite can either erase or add $1 trillion to the market. And that's very new. And that's also probably very much related to the speed of information that we have today. Information moves so quickly today. And that's why we have such violent moves. And that's why twice a year we have somehow, somewhere, an index, maybe a stock, maybe a sector that breaks an all-time high record or an all-time low record or an all-time volatility record. A once in a 30-year or once in a lifetime record. And today is yet one of these days where CNBC was pretty good and found us a record, I guess. NASDAQ posts longest win streak since 1992. That is the very rare record of this Middle East crisis. Right, and of course you remember April Liberation Day. We had other records. We've had many records. We keep breaking records in volatility in this market. So the question is, am I buying? Well, I added a few stocks, or I've published those on Patreon, like Zoom, for example, because Anthropic, I think, is not represented in valuation, but very few buys right now. For me, it's very few buys right now. "Quote unquote," too much cash. And the reason for that is because I'm waiting for a period of stabilization. I want to see stocks not drop 30%, 40%, sometimes 50% on a tiny thing that's wrong. Like, I don't want to see that anymore. I don't want to see the flows being controlled. I want to see the company fundamentals. I want to see the company specific information being controlled. And we get company specific information moving the stocks. We get that once we escape macro madness. And it seems like we've been escaping macro madness, but right now everything's green. Right now it's tough to discern how much of many of my stocks are up. For example, like HIMS is up something like 35%. In the 35% that HIMS is up, I'm sure some of it has to do with peptides. I don't think all of it has to do with peptides. I think much of it also has to do with the fact that the market is recovering. So it's not just the peptide news, right? If we had a quiet market, the stocks would trade much more nicely and in line with headlines, and then you can make decisions based on fundamental analysis. Like this is making decisions much closer to playing some sort of a casino game or a poker game, and how much do you put on the table, how much do you remove off the table. It's a tougher market for people who are into fundamental analysis. It's perhaps paradise for people who believe in technical analysis. Perhaps it's paradise. But of course, technical analysis, sometimes you can get a very wrong trade. You can get something very wrong with your options, and you can get wiped out. This is also something I've noticed since the beginning of the 2020s. Is more and more people are having catastrophic losses because the moves of the market have been much more random than they used to be. So you've had a lot of people having catastrophic losses where they lose the entire portfolio and they can't recover. And of course, the culprit often here is margin, is perpetuals, is options. You know all of these culprits, all of the dangers of this market. So anyways, be very careful. I would be very careful. I don't think we're out of. It's not that I don't think we're out of the woods. It's that I think that I don't know. I know that I don't know. I know we're going into a weekend where there could be a tweet. And knowing that I don't know, I think in many ways is a very powerful thing, because you don't even want to put yourself in a situation where you could get wiped out, which is a problem, right? There could be a tweet over the weekend. We know the U.S. clearly wants to end this, but there's other parties involved. There's other countries involved. What if another country involved starts, bombing Iran over the weekend, like it's happened before? Unilaterally, what if another country decides, hey, we're going to bomb Iran now? And then the U.S. is like, here we go again, even though the U.S. may not have done it this time, even though they did it prior times. It's a mess. And I'm not interested by war. This is not a topic that interests me whatsoever. I want to focus on the fundamentals. Like, I understand politicians and geopolitics, they have to do their job. That's their job. But I just want to focus on the fundamentals of the companies, and these companies that are changing the world and focusing on what they're doing to change the world. Unfortunately, we have a traditional world holding us back sometimes. So anyways, the top 3 assets that I love on this channel, of course, it's Bitcoin, anything Bitcoin related, of course, strategy, anything strategy related, Bitcoin miners, or anything Bitcoin related, anything hard money related, I love very much on this channel. And we're still in the valley of despair. I mean, 75K, I'm still not happy, right? I'm still not happy. I still don't understand how we broke below 100K. I don't think we should have ever broken below 100K. It was a problem with the flows, a problem with the liquidity. Now, Bitcoin is in a recovery phase. I think Bitcoin has a long way to go in its recovery, but the recovery just started. But I think it's way too cheap. I think it's nowhere near it should be, especially now that we've accelerated the money printing. We've accelerated the spending, right? We've spent something like $200 billion on that little Middle East escapade. 200B. Who's going to pay for that? Right? I'll give you a hint. It's going to be monetary printing. So to me, Bitcoin should be more expensive. HIMS, like I said, HIMS had no business trading back at 15. I think HIMS has no business being at 28, especially if you look at 2025. If you were to take the average weighted price of HIMS in 2025, what would it be? Like a 40, low 40s, something like that? It makes absolutely no sense. HIMS was probably punished because it was a risk-on stock in a risk-off market, and boom, you sell off HIMS. And then I'll show you 2 other companies. Of course, I think Nvidia is less controversial than Tesla. I know a lot of people dislike Tesla. My channel is interesting because I probably have people who come watch me for Bitcoin and they don't get why I talk about HIMS. I probably have people who come for HIMS. They don't get when I talk about Bitcoin. And then once in a while I talk about Tesla. I talk very little about Tesla because there's so many dedicated channels to Tesla. I feel like I wouldn't add much compared to the many dedicated channels of Tesla. But Tesla, make no mistake, is a very big position for me. And Tesla is still trading, $60 less than what it was trading before the events of 10/10, which kind of crashed everything, before a prolonged shutdown, which crashed everything. I mean, we're still trading, quite a bit down, like 15% down from those levels, roughly, right? Nvidia is trading also below the levels of October. Before the beginning of the October crash, Nvidia is also trading below these levels, while announcing absolutely insane products, absolutely insane adoption. AI is hotter than ever. AI is growing faster than anything we would have anticipated, and the stock hasn't moved in a matter of 6 months. And so same for Tesla, the stock hasn't moved. So the best company in this generation are slightly down to, down quite a bit for Tesla. We were trading at nearly 500 at one point on Tesla. So down quite a bit for Tesla, down a little bit for Nvidia, and they're the best companies of our time. And then what I also believe are some of the best companies of our time, Strategy, HIMS, but these heavily disagreed on companies, the heavily disagreed on companies are down a whopping, still 60, 70, sometimes 80%. And that's after the recovery. So to me, it's all a problem of the liquidity under the hood. It's a wild market. If you are in the market for a few decades and you've made money in the markets for a few decades, don't let anyone tell you got lucky. You did not get lucky. You had to go through a lot of pain, right? Think back to late March. Think back to like March 30th, was it? Or March 28th? I can't remember. Like late March. Like think about the pain. There was a lot of pain late March before that so-called bridge day was supposedly coming up. You've earned it, right? The pain is the price you pay for the success. So here's my take, a more practical take now. We've run so hard, lots of volumes, lots of conviction. That's why we've run hard. We've run so far, some assets are way up compared to their lows. And we've run so fast, and so fast is really the bigger problem here. The problem is the speed, right? Because I think many of these assets are still extremely undervalued and under-owned, but the problem is the speed. We look at the past 5 days. The speed at which we bounce back. That's the problem, the speed. And so I believe we're due for a pause. Take a breather a little bit. We're due for a pause. And I hope next week we'll have a pause. And if we have a pause, I will look at this as a positive. It's a positive for us to actually get back to a market that starts looking at the idiosyncrasies of companies and stops just looking at the macro. So I look forward to that. Also, don't forget that President of the United States still said that the blockade was still active. So if the blockade is still active, I mean, we still have to go for the weekend. What if there's an incident over the weekend, right? What if, I don't know, what if a fishing boat is, shot at or so? I don't know. There's a lot of unknowns. There's a lot of unknowns. So, I think it's a very powerful thing to say that you don't know. Right now, I don't know. And because of that, I know I want to be prudent because I don't know. Okay. Will we get overbuying opportunities until 2029? That I think so. I think we will have more buying opportunities before January of 2029. And why is the reason, right? Because clearly this decade we've run at 1 to 2 black swans a year, right? From Silicon Valley banks, from not thinking about raising rates, to the largest increases streak of rate increases in the history of rate increases. We've had so many black swans and gray swans. And so I think we're going to get over once. And so I'm really hoping this one closes a chapter. I'm hoping we're over with this one. But here's a sample of what I kind of think the other ones that could happen. And keep in mind, these are the takes from somebody who's absolutely not interested in this topic. I like technology. I like business. I like growth. I like innovation. I'm not interested in this topic at all. But you have to, unfortunately, as an investor. So here are, I think, some of the macro crises that could happen. I think Cuba and Venezuela is unresolved. I think there could be something happening between Cuba and Venezuela. I think the U.S. is going to continue the revival of the Monroe Doctrine. The Monroe Doctrine is saying that the Americas are ours, if you look at it from the USA standpoint, and you should not impede on our turf, because the Americas are ours from Greenland to Argentina. We control that, the United States, and that's the Monroe Doctrine in the nutshell, and it's making a comeback. And with that framework, you can explain so many things. Like you can explain, of course, what happened in Venezuela. You can explain the sharing of U.S. intelligence with Mexico, with the cartels or whatever. You can, and I think if something happens in Cuba, you're going to be able to explain Cuba with this doctrine. And with this doctrine, you can also explain Greenland. Don't forget, we had the Secretary of Defense, was it 2 weeks ago, posting a picture of him in front of an old Monroe Doctrine era map, and Greenland was represented as ours. You know what I mean? So it's kind of like I think did POTUS really give up on that? Did he give up on Greenland? I don't know. I'm not sure. I know that I don't know. And because I know that I don't know, I know that I don't want to rush in after stocks are up 15%, because I know that I don't know. Okay, tariffs again. Are we done with tariffs? Do you remember at the peak geopolitics tensions in the Middle East, you had the president say, we're going to put 50% on anybody who enables Iran to manufacture whatever. I think he was talking about national security, of course. Again, topic doesn't interest me. But it tells me that his go-to is the tariff. Current U.S. administration, if they want to get anything done, they're going to go to the tariffs. So I don't think we're entirely out of the tariffs. And the last one, of course, is NATO. Of course, that's been the talk of the past few weeks. NATO evictions. I'm not too sure about that. Payments. Of course, this has been a talking point for a long time. That I'm even too sure about. But what if you had like a special NATO tariff? Like I could so see it. We're on a cozy Wednesday afternoon. We're a nice little green NASDAQ up 1%, and then you get a 3-page tweet implementing a 75% tariff on all NATO countries, and maybe you call it something interesting, and then boom, all of the stocks drop 3%. That's a risk that we have until 2029. That a long-winded tweet with, say, maybe a list of countries, and then you're like, Spain, 100% tariff, Germany, 80% tariff, the UK, this tariff, France, this tariff, based on some calculation to pay for NATO. That could be something I could totally see happening, or something entirely different, maybe something related to AI, whatever. And finally, the tariffs. So we have the Monroe Doctrine, we have Greenland, we have the tariffs, we have NATO, and then perhaps the shutdowns. And the shutdowns, I think, they're going to be a recurring thing. So after the midterms, right? Maybe the shutdowns will get. I think about some of the stuff that could occur in the midterm, depending on who wins in the midterm. So the uncertainty is going to remain. That's my only point. I think the uncertainty, I think we'll have other opportunities at one point until 2029. I think we'll have other opportunities. And it will be important to know how to react when we have these opportunities. It will be important to realize that the what they call the taco trade has worked more than once. It turns out the bridges and the infrastructure of Iran was not destroyed, contrary to what people thought up until an hour from the deadline. You may remember that. So I think it will be important to kind of look back at the playbook. There is a playbook. That was Kobeissi letter. He had like this whole playbook. Yeah, there is a playbook that we need to understand. And you know what? Perhaps in 2028, we'll be the pros at trading this market, and we'll be so good at it. And then everything will change again in January 2029. And then maybe, hopefully, the 2030s will be a decade as cozy as the 2010s were. At least that is my hope. But anyways, your job in the 2020s is to survive. Of course, today is an easy day to survive. This was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.